Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News Channel by wavestrategy.com. And if you are tracking markets on a net basis over past 2 weeks, Nifty has not done anything. It was somewhere around in the zone of 10,685, 690 levels just around 12 days back, and it is even today at the levels of around 10,700 or around those zones. That clearly shows that if you are holding any positions, especially in case of a derivative position, it has not done anything until the expiry yesterday, where we saw some very sharp up move during the final hour of nearly around 120 points. And now again, Nifty is down by around 30-40 points in today's session. So on a net basis, there is no net progress that is happening. And that is actually very time consuming, which is eating up the values if you are an option buyer. It's eating up a value with no net progress, which is happening on the either side. So whether you are short or you are long, prices are going down and then going up and then again not doing anything is just going to eat your time value of the options, and it is also going to eat up the volatility to some extent. And that's why it's important to form a strategy based on the pattern that you understand. Whenever markets are in a sideways range, it's best to avoid taking a positional call in a specific direction, because then making money is not going to be easy. And during such times, it's better to have focus more on intraday trades, maybe buying for from 1 or 2 days horizon and then squaring it off as soon as you get something. That is the best strategy that you can form in this kind of a market. The other problem that you might have seen or faced is many of the stocks during the fall, which happened, many of the stocks declined sharply, especially from the mid cap and the small cap space. And now, when the markets are rallying, those stocks are not moving up the way it was expected to. So, there has been a very slow progress on the mid cap, small cap, which means that the buying is not emerging across in the broader markets. It's a very stock specific action which you can see currently, and that's why trading is not going to be an easy thing to do. The other important part is you might have seen happened towards 11,000 post that we saw a very sharp fall back towards 9950, and now again a rise back towards 10,725 and then consolidation. So post such sharp rise and sharp fall, it is expected that in this kind of a leg we can expect a range bound movement, because it creates confusion in the minds of traders or investors which way markets want to head. A few might be bullish, expecting a new breakout above 11,200 levels. A few might be bearish, expecting it to break 9950. And on a net basis, Nifty actually is not doing anything, and that is the reason. Because of that confusion, markets are not doing anything. Irrespective of whatever the news or events, markets are still stuck in a range. I think this range bound action can continue for a few more days or a week or two, because there has been a cycle low which was supposed to be formed, and it did work out well. Yesterday, a cycle low was formed on Nifty, and we saw some pullback on the upside. And there is a possibility that over next 1 or 2 weeks, we might see a positive bias on the market, but it's not going to be a very strong momentum, given the fact that the buying is not across the board. The momentum might be very limited, and that's why trading is going to be not easy. You need to pick up, you need to be very selective in the trades that you are going to do now. Let us try and look at what's happening with Nifty. Let us look at the chart. This is a 55 days time cycle which I have applied, and this is the cycle which worked out very well. The low was formed on this day over here. Another low was formed here, and the another low was formed exactly on 30th of May. So 30th, 31st of May was probably where the low was expected, and I think 30th of May is the low as per the cycle which is now formed. Let me apply one more indicator. During the sideways market, it's best to use an indicator which is known as BollingerBands, because this indicator will help you understand the broader range which you should be using. So I use 20 and 2. Let me apply it here. And if you look at this, the entire band has now turned out flat. The lower and the upper band has turned out flat. This is a classical indication that the overall market is going to be in a range. Since the overall band has been flat, which means that markets are not doing anything on a net progress. This is 2 standard deviation up and down from the 20 days average. And if you look at it, we are getting a resistance around the zone of 10,864, which means around 10,880 is the upper end where we can expect a resistance on the markets. And on the downside, there is a strong support which is emerging around 10,460, 450 odd levels. If you remember, 10,420 had been the level that I have been talking about for so many times. In fact, the low which was formed on Nifty at 10,420, and again there is a bounce back. The reason this specific level is so much clear in my mind has been, first of all, yes, because of 420, and next is, if you look at this entire zone of movement in the past, this is the level where Nifty has been respecting for many occasions. So if you look at this low, if you look at this entire zone of consolidation over here, and again the support, so 10,420 is the level which one has to keep in mind. Break of this level will be a first warning sign that a bigger downtrend has started. But unless that happens, given that we are now having a 555 days time cycle behind us, there is a possibility of some positive bias which might emerge over next 1 week. So in this coming week, the strategy should be looking out for buying on dips rather than breakout, because the breakout technique is not going to work well unless there is a broad-based buying which is emerging. It's going to be an overlapping rise. I am not expecting it to be a very strong rise as of now. Only a very strong breakout above the level of 10,000, which was the high around 10,900 or 800 levels, is going to confirm that a bigger up move is starting again. So keep a watch on 10,900, 800 to 10,900 zone. That's a very important zone. If market has to break above, it has to break the Bollinger Bands on the upper side and give a strong trending move in that direction. So, and the participation has to be across from mid caps and small cap space as well, which will only confirm that we are now again starting a bigger degree of move. In case we fail to do that and we start moving lower again, below the low which was formed yesterday, if you can check on the charts yourself, I'll mention those levels in the report. That will be an indication that we are completing some important top and we are again moving lower. So there are times when you have to wait for markets to clear the trend. We are exactly stuck in a range. I do not want to preempt and forecast a positive breakout. I know many of you want to hear whether it's going up or going down. I'm not going to do that, because there are times when you have to wait for markets to prove where it wants to head, and this is one such time. Wait and watch should be the ideal strategy if you want to capture a trend. If you want to trade in the range, buy on dips is what I would say should be the strategy, and then expecting a move around 10,800, 10,850 odd levels. But breaking about that zone is going to be the key information that I'll be mentioning in my daily research report for markets to take a strong trending move. Whether it breaks or it reverses from there is going to be the key deciding factor, and keep a close watch in the daily research report, financial waves, short-term update. I'm going to very, very prudently take a very strong stand once that happens. So in a nutshell, for the upcoming week, the strategy is going to be use a move on the downside as a buying opportunity, but keep a very strict stop loss, and then expecting a target on upside around 10,800 odd levels. But you need to know the wave counts, you need to know the patterns. This is just for educational purpose. This is what I think. Unless you apply a stop loss, you shouldn't be trading. For the accurate and key levels, you should refer the daily research report, and only when you have a complete information of the wave pattern, then only you should execute any kind of a trade. This webinar is again for educational purpose. It is not for soliciting any kind of a trades. But I hope if you apply Bollinger Bands yourself and try to see where the resistance and supports are, apply it on the hourly charts, apply it on the daily charts and weekly, you will get a very clear insight what is the range of the market, and you can then form strategy based on those range bound movement. We are also coming up with a training which is going to be scheduled in July, third week. I think it's 21st, 22nd July, Saturday, Sunday. And in case you would like to register for that training on Elliott Wave, Neo Wave, Time Cycles, you can always write to us at helpdesk@wavesstrategy.com or call us on 999204 22202. That's it from my side, and see you again next week, same time. This webinar will be available at 5 on the website wavesstrategy.com, And for any questions, you can post your charts on the traders forum and I'll be more than happy to address them. Thank you and have a wonderful weekend. See you again next week, same time at 4 on a Friday.